Hey guys, hope you guys had a good day trading today. A bit of an interesting day of trading. This is the 15-minute chart. I just wanted to point this out real quick here. So if you look over at 10:15 this morning, this happened actually at 10:25, but on the 5-minute chart. But we had this really interesting wick down here. Now, if you see pre-market and after hours, we get these wicks fairly regularly, after hours and whatnot. But for the most part, they do not happen intraday like that. So, I've talked about phantom prints before. Basically, what that is where, let's say our actual true low, like today, is 412.22. We'll get these phantom ranges where it'll say, like the actual displayed range of the day will say that our low of day, say, is 410. But we've never actually hit that level. So, that's a general phantom range. However, what was interesting about this mostly is that intraday on SPY at least, it showed and represented this 408.91 as being our actual low of the day. However, obviously we never touched it. And if you were watching this time period right here, after this sell-off, we were looking for a little bounce, or this sell-off right here, or this candle wick, really kind of threw the technicals off. And we had some extreme volatility come in there once that happened. But what is really interesting to me about this phantom range or this dark pool print, whatever it was, is the fact that until market close, that was what our daily range displayed. However, once market closed, that actually updated, and now it's showing the true low of day right here at 412.22. Kind of interesting. Just wanted to point that out if anybody saw that happening and didn't understand why that was happening. All right, so going over the daily here, we're in an 11-day long bear channel. We finally broke through that. So we actually took out 414.56 demand today because we put in a new demand at 410.53. So basically, this is a really nice double demand support area. And with our channel breaking here, we should begin to look for a little bit of a dead cat bounce here. Now, we are in extreme bear momentum on the daily, and when we are in extreme bear momentum, the 8 EMA should be about as far up as we push. So right now, that's about 418.5 going into tomorrow. However, I have a 419.51 demand that we could target also. If we break through these, then my upside target is 423.73. That's that, and this is off just a little bit here. So it's actually 423.68. That's our supply from October 24th. Now, if we closed over this level into end of week, I would start looking for a bigger move up. But most probably is that we're going to, kind of like here, see a move up, and then we'll get rejected back down. Now, going over to the futures here, same thing. We actually got a new demand right here at 41.37. So that takes out 41.56 and 41.87 demand. So same thing here on futures. And I don't know why this channel is just a little bit off. Again, TradingView just, I feel like it always is off just a little bit. It drives me nuts. But we are still in our bear channel. However, as you see, unless we were to gap down from 5 to 6 below 41.74, that's about a 10-point drop from here, and hold 41.74 all night long, we are going to break our bear channel here also, which should provide some upside movement. Again, though, we're in extreme bear momentum, so 42.19 is about as high up as I expect us to go. But if we can continue to push through that, and this is a little bit bigger than a dead cat bounce, 42.41 and 42.71 are our upside targets. Once we close over 42.71, then I would be looking at a much bigger move to the upside. Going over to the Qs here. So Qs were a little different. If you remember from Friday, they were the only one that got a new daily demand at 343.58. With this new demand here, we pushed up and we took out 349.15 demand. So on the Qs here, you can see we are still in our bear channel, and that resistance is 350.2 for tomorrow. So essentially, we could open up, have about almost $2 of green, basically exactly $2 of green, and still be in our bear channel and still come lower. Now, again, we are in extreme bear momentum on the Qs also, so the 8 EMA, which is right about 352.2, so that's about another $2 up, should hold as resistance. However, if we push up, we have this double demand to target here at 354.14 and 354.52. Again, though, until we really break over 359.21 right here, the 24th high, I would not be looking for too much sustained upside. Now, going over the NQs here, we did get a new daily demand right here today at 14,244. So that takes out 14,281 and 14,313. So same thing here. This is that fight over the 200 EMA. This is kind of what I was talking about last week where I said, expect this to be a multi-day fight. Very rarely does it ever drop through, and very rarely on the way back up does it ever just push through. Our 8 EMA sits right around 14,550. So that will be a potential rejection point for tomorrow. But if we push through that 8 EMA, we have 14,647 and 14,764 as potential upside targets. If we close over 14,832, which will also be the 100 EMA, you can see that green line sneaking in there, that would then open up the potential for a much bigger upside move. Take a look at the VIX here. So I told you that 21.71 on Friday was a big resistance area to watch. Couldn't quite break through it. So today we came down. We were holding 20.65 demand for a little bit. We had a back test of it. We're kind of trying to break out over it. And then we ended up just basically losing it. And that all kind of happened right around that time of that phantom wick around 10:30. Once we lost that, it was pretty much over for the bears. And right now we're sitting between the 8 and 20 EMA. We did get a new supply at 21.28 also. So basically from here, what I'm looking for is a retest of the 20 EMA, which is at 18.71. If we can bounce off of that, likely we will go back up to that 20.65 demand and take that out and look for, once again, a move back to the 21s to kind of fight through that resistance. The question will be FOMC is on Wednesday, so that's 2 days from now. A pause is absolutely, or continuation of the pause rather, is the expectation, and nobody really should be expecting anything but that. But what it's going to be very critical and important to listen to is, what does Jay Powell have to say? Is he going to remain hawkish like he did last FOMC meeting and say, we don't have inflation conquered? Is he going to tell that he's worried about core inflation or regular inflation? I'll be very interested to see kind of how he hints forward for 2024. That will be the biggest and most important things to listen to. Now, we will not get a dot plot that will come in December's meeting, but he will talk about obviously what their trajectory is. Most likely it'll be the same old we're data dependent sort of thing, but that's mostly what markets are probably going to focus on. They are going to want to hear if there is a scenario where we cut rates in 2024, or if we're still expecting we could possibly get a rate hike at the December meeting. Now remember, Jay Powell said he was pretty clear that he foresaw at least, and most of the FOMC members did, foresaw at least one more rate hike into the end of the year. Now that rate hike, if it's not coming tomorrow, would have to come in December. Now, do I think they're going to do that after taking 2 meetings off with no rate hikes? It's probably unlikely, but we will get another inflation reading, and that inflation reading will be pretty much what decides what's going to happen. If inflation is re-peaking and we're going to try to start pushing back down, then likely we will be done hiking, and there's no reason to really justify another rate hike, especially just job losses is slightly going up, and obviously the credit crunches and things like that in the treasuries. But if inflation continues to bounce from here and we push back up, especially on core, there's a very real scenario in December where we could get that rate hike. So very interested to see on the 1st, which is, FOMC, we'll also get the Cleveland Fed data for CPI. I'm very, very curious to see what that data will be. And I'm very curious to see what Jay Powell is going to have to say on Wednesday. But hope you guys had a good day today, and I will see you guys tomorrow.